Good afternoon, all. CamelbackTrading.org coming to you this Thursday afternoon, February 24th. We are looking at Window Traders market profile of SPY, IWMN triple Qs. And let's start off with this. Look, it took me a long time to come around to this. But this is a beautiful example of news meaning absolutely nothing. I don't watch news, don't care about news, throw news out the window. Okay? You can't have it on both sides. You can't say the market was down $10 gap this morning and then because of Ukraine and then we rally $18. What happened? Is the war over? Was Putin seen dancing around with the Ukrainian president and kissing each other? What changed? Nothing changed. So don't use the excuse that the market went down because of the war. Market went down because we took out January's low and a double low from January and yesterday, and they pushed lower. But also what happened? Well, we've been talking about this for days now. Yesterday morning I said the market's ridiculously short. And I didn't expect yesterday to go down, but they did. Granted, they pushed it. And what happened this morning? Well, we took out January's low, and they got even shorter. So all this was, so far today, what transpired is some of yesterday's late shorts, overnight, pre-market, and whoever continued shorting early today. That's all it was who got ripped apart. The market is still very short. We took back 2 sets of single prints from yesterday. We closed in the middle distribution. Remember, it was a triple distribution yesterday. Russell and Q's closed in their upper distributions, and they came close, not real close, but they made an effort to get yesterday's high and try to have an outside day up. Now, they didn't get it, but boy, did they battle for it. Now, nothing's changed in the bigger picture until we take out a daily high. So there's 2 lines in the sand for me for both sides now going into tomorrow. K's low today in SPY is just below January's previous yearly low. It's also where the single prints get filled, right? We went out with 1 set of single prints and a price probe. This is my line in the sand for buyers. You don't want to get accepted back below K's low. Remember, we ended 9 wide. As high as we can go, we raised it, but it could only get raised 10 cents. But it did get raised. But this is my line in the sand. If buyers don't defend this, well, then nothing's changed, and we're going to go and make a new low. However, if they defend that, then let's get to the seller's line in the sand. B's high from yesterday. We have 1 more set of single prints. That would put us into the upper distribution. That's where our highest accepted price was. The more you get into these single prints, the more shorts continue to panic. Remember, if you just look at these days, right, I'm in 25 tick increments, so it doesn't look as bad. But this market did nothing but go down, right? For 5 days, we went straight down. So the market got shorter and shorter. So the higher you go, the more shorts start panicking. Next thing to really remember, this was in no way in hell any long-term selling. Why? Well, first of all, long-term sticky money, Putnam, Fidelity, Teachers Pension, you name it. They're not going to let the market gap $10 lower and literally rally $18 straight up. We had barely a pullback in ENF. So I can assure you, not only was long-term money not selling this market today or the last 5 or 6 days, they were probably buying it passively at the POC. Now, I don't know that for a fact, but I can tell you for a fact they weren't selling it. So the bigger picture hasn't changed yet, but if we take out today's high in any of these 3 indices, you will get more short covering panic. And that's why I think if we get above B's high from yesterday, you have good odds of seeing 435, 440 rather easily in SPY before you take any kind of pullback and even attempt to maybe even test and take out a new low for the year. That's how I'm looking at it. Went home flat, had a good day, believe it or not. Now look, we always talk about, and again, this video is going to be longer, but again, if you're watching it because I'm hopefully educating and informing you. People scream gap rules all the time. You know, for those of you who have followed me, there's not a shot I'm looking to short a gap of $10. Wasn't looking to long it either, but I'm not shorting it. So for that gap and go group out there, if they did that, well, they got absolutely annihilated because we opened and basically drove straight up. Now, that being said, I shorted A, B, and D at visual levels and made money on all of them. And I'll go over them in a second. Okay? But that's why that. Now, did I expect an inventory adjustment? Yeah. Did I expect it to go as hard and without pulling back as much as it did? Of course not. Of course not. We rallied 18 straight dollars, basically. We filled a $10 gap. Last week, I think it was, we filled a $6 gap. So, you talk about mindless machines and emotional trading and retail traders and FOMO buyers. Short-term traders can move a market. Now, I took 2 shorts in A against visual levels. The first one was against, was it last week's low? It was against a very visual area. Now, and I didn't write down exactly what it was. I'm trying to think. But anyway, it worked out. I did 417 puts in A period the first time. And I'm trying to think what it was. Well, again, I forget. But it worked out. It wasn't just a reason for a short. It was because the gap was getting taken back quickly. There was emotional buying. They were spitting out algos. All I was looking for was 20 or 30 cent pullbacks, which I got. So now you might be asking, well, why wasn't I longing it? Because I don't know how long this inventory adjustment's going to go. You know how quickly they could shut off and reverse and rip down and take out the day's low? So, believe it or not, I was more comfortable on that. In B period, I took the short because I didn't think we were going to go trend right away. And we didn't. Came in nicely. Those were the 418s. Same thing in D. I didn't think we were going to go trend yet to the upside with lower value in the gap. Those were the 420s. Now, after that, things changed dramatically. I knew something had changed. I told the room the low in the day is, I'm going to say, is in. I circled the low on the day. I said, odds of getting the low of the day now is slim and none. Because now, even though we have a gap in lower value, buyers are wrestling control from the intraday. That's important to decipher, to distinguish between still one-time framing down the daily and wrestling control for the intraday. Yes, we had gap. Yes, we had lower value. But we had one-time framing up. We got the IB high. POC was starting to get raised. All these little nuances were leading more and more to buyers wrestling control. We had a double distribution in the overnight. We got into it briefly in D, E, and F. Couldn't do anything to the upside. We got into it in F and G on the downside. Couldn't do anything. I did take, the only rest of the trades were longs. I longed F twice, 413 calls, but nothing big because at the time I was looking for half back and value low, which obviously you can't see now on the chart, but would have been a beautiful opportunity for a bigger long play. Didn't get it, didn't take it. Certainly G and H not being able to take out F's low was a nuance. I also told the room that E and F poor high, that's going to become a launching pad possibly. So we took out E and F's high the first time, got nothing for it. And I was caught flat-footed the second time because I absolutely should have been long the second time we got above E and F's high because that's when it ripped. But I didn't. But I did long F twice a little bit. I longed K and I longed L. Never pulled back enough for me in M to want to take a long. It was a good day. Nothing spectacular. You know, with an $18 range. And by the way, 200 million plus shares on the tape. That's another reason people are going to say, oh, there was long-term money in there. There's not long-term money buying it up. There might be long-term money here. You don't know how vicious short covering could be and momentum buying. You really, it's amazing. So, I'm happy with what I did today. People are going to say, you look at this and say, my goodness, you should have made $1 million today with that range and volume. I trade for a living. Every day is different. Very happy with what I did. Right? Didn't have a losing trade and did well. As far as destinations for tomorrow, today's high at 428 428.76. Very important, because if we get it, we come into balance on the daily. Above that, our last set of single prints from yesterday, 430.27 to 431. 431.17, highest accepted price. That's B's high. That's really my line in the sand for buyers to really get the rest of these shorts to panic. 433.26 daily high. 435.50 daily high, and 437.41 afternoon rally high from February 18th. For the downside, we have the price probe, L's high for 425.05. Single prints, 422.94 to 421.40. That's a large set, 154 cents from L's low to I's high. 417.94, G's high, 9 wide. F afternoon pullback low, 415.34. And 410.64, which right now, unless we fall apart again in the last 2 days, will be a monthly low. So before I get to the chart, what am I looking for tomorrow? Well, if you want to be a buyer, you want to see this open inside of the price spike or above it, right? You certainly don't want to see it open below I's high. I can tell you that much. As a seller, you want to see it open down there. Now, on the flip side, I don't want to see his gap too much higher either, because I want to have a chance to see if we're going to go fill those single prints to take along, and then to see if we're going to get above B's high. If we go and have a $5 gap higher, all that buying possibility for me is out the window. Yes, we might still go higher, but again, if we get a large gap to the upside, that's going to offset what I want to do. On the flip side, if by some chance we open below I's high tomorrow, well, I'll tell you what, I'm looking for shorts again, especially if we get below K's low again, which would be January's low. So that's kind of what I'm looking at tomorrow. And then on the chart, one other thing we had today, real quickly, hold on, because this is important, is we had good excess. We have a $2 buy tail, 2.5. What does that mean? Excess ends one auction and begins another. Well, it certainly began another auction because we ripped high at $18. Is it finished? I don't think so. Now I put these lines back in. Remember the lower highs? Well, we still have those lower highs. And we obviously smashed through this thing. But here's what I think is important. We had a double bottom yesterday that got absolutely violated this morning on a $10 gap. Well, one day doesn't make a market. You've heard me say that a lot. Well, not only did we come back into that 2-day low, we closed pretty inside of it by $8 or $7. So that's why today's high is so important. If we take out today's high, we come into balance, and I firmly believe we see 435, 440 easily before we test yesterday's low. If we don't take out today's high and we get back below K's low, which is this double bottom low again, nothing changed. We had an awesome day in the trading room today. Not only trading, but walking everybody through this volatile day the entire way. So, again, come check us out at camelbacktrading.org. Really appreciate the likes and subscribing to the channel. Enjoy your evening, rest up, and we'll speak prior to the opening tomorrow.